Hello and welcome back. I'm Joey, founder and creator of myatmm.com or myatthemoneymachine.com. First off, we need to get the disclaimer out of the way. This is not investment advice. I do this for education and entertainment purposes only. Um, so, this is the weekly review, and we're reviewing all of the options that expired the previous week. So the way we do that is we log into the myatthemoneymachine.com's website, go to the cost basis section. I now have this only positions filter, so we can easily navigate through just the stock symbols that we have positions in. That makes navigating through this quite a bit easier. All right, so what we're going through is each stock, looking at all the positions, trying to remove any of the options that expired. So these options, we have two put contracts here, but they don't expire till the 16th, which is this Friday. So nothing there, nothing on the calls, they expire this Friday. So move to the next one. Still two December 16th expirations, nothing to do here. MVIS had two call contracts that expired this past Friday, worthless. So that was, we pocketed $2 there. So we can go ahead and remove this. All right. So the next one's NVAX. Expiration, there was a put contract. The last price was $16.50. So this 16, we pocketed that $70. It expired worthless. We can remove that. All right. The rest of these don't expire till this Friday. So that's all to do on that one. Moving on to rum. Checking the expirations here. Here's two call contracts that expired Friday. So expired worthless. So that was $14 we got to keep. And this one doesn't expire till the 23rd. So that has a ways to go. All right. Was that the last one? Yeah, that was the last one. Okay. All right, so we have removed all of the expired positions off the table. So now we need to go back and see what positions we need to get back into. And this can be a little daunting at first, but basically we just work it from the stocks that we own that we can see right here. So first off, we have Clove. We have 400 shares. Let's see what open positions we have on there. So see, we already have a call contract here for 4 contracts. So that covers all the 400 shares we own. So that one doesn't expire till Friday. So we don't have anything to do. And as you know, if you've been watching the videos, I like to usually play both sides. Have at least one put on the lower end to sell, and then I also sell the call contracts for however many shares I own. So I already have the put contract on here too, and apparently it looks like I did 2. I usually only do 1, probably because this one was a cheaper stock, so I did 2, and it doesn't expire till Friday. So nothing to do on Clove this week. MVIS, all right. MVIS, it looks like we don't have a call or a put on this one, so we need to deal with this. So MVIS, we'll pull that up right here. We need to pull it up over here as well in the web application so we can see where we're at as far as the cost basis is concerned, so we know where our profit point would be and what we need to sell it for, or you know, what strike price we're targeting basically. And something that I had done previously on NVAX a couple videos ago was, right now our overall cost basis is 348, which means overall I would want to be targeting a 350 strike price. That way I get out, break even, and keep all the credit and the premiums that I've collected up to this point. But something I did with NVAX to maximize it, because the higher one, and we'll look at Robinhood, I don't know if the 350s are paying anything, because on these cheaper stocks, usually see, so since the last price is $287, that means the first strike price up would be $3, and then the second one up would be $350, which is what we would be targeting. And generally, the $350 is not paying anything. So Here I have 200 shares, so I could sell 2 call contracts on this at 350. I may have to go out a week or 2 or 3 maybe to get premium. But I don't have to do that on these, on this 2. I can go down to $3 on these, and chances are much higher that I could pull premium on that because I would get out of these as a wash. There is some math that might have to be done if it does go back up to 3 and I get called out on this, because this cost basis is taken into account that I purchased these at 3. So if I was to get called out on these, it might raise my cost basis back up a little bit above 350. So we'll have to just play that as it comes. In these cheaper stocks, it works like that since the numbers are so close together. So in any case, all right, let's just work off the basis 350. I mean, if we can make some good premium off of our overall cost basis, that's so much easier to do and less headache to deal with. So let's go ahead and look at the options that are available. We would want to be selling a call. We'd want to be targeting Friday. Okay, so now see, the 350s are at $1. So that's not that exciting. So it looks like I'd want to go ahead and just probably do 2 contracts at the $1, and I could do 2 contracts at the 7. That's more exciting to do. And I wonder if I could do that in one transaction. That would be really nice if I could. Something tells me I may not be able to. Let's go ahead and just try. Let's see if I can do this in one transaction. Yeah, see, it's going to get confusing because what do I put for the contracts? I mean, if I do 4, what's it going to do? Yeah, I really don't know. Let's click on review and see what happens. Yeah, I think it's might be getting confused. All right, so let's back this out. Let's not get too confusing here. It says I have 400 shares available, so it knows I have 400. Okay, so let's just stick with this one first. And we'll do 2 contracts at the penny. And hopefully that will go through. All right. Actually, in the off chance that it bugs out on me or something, let me do the first one first, and I'd rather just play with this on Monday if I needed to. All right, and it says 7 and 9, which kind of insinuates you should be able to get the mark, the middle of that. So I'm going to go ahead and try and do 8, and we'll see if it fires. And we want to do 2 contracts. So this will take care of this $3 one right here for the 200 shares that we own. So let's go ahead and review that. Yes. Click submit. All right. So we're done with that. And let's go ahead and do this one, do the 2 at $1. Review that. Okay, so it didn't get confused this time, so it does know. Okay, good. I think last time just adding both of them confused it. All right, so now we got those 2 queued. Let's go back to the home page. So there's our MVIS queued ones. And now, like I said, I usually like to go ahead and play 1 put as well to play the other side. So let's go to MVIS. We want to trade options. We want to sell a put. All right, so the 250s are only $2, so not much premium there. Probably because it's all the way up there. So, but let's go ahead and do that. It could be free money. Because when I play the put and the call, the stock can only go one direction. It's either going to go down or it's going to go up by the end of next Friday. So either the calls are going to win or the puts are going to win. And if it stays in between them, both of them will win. So that's why I like to play both sides. Plus, the more it goes down, if I keep on riding that wave down, I keep pulling my overall cost basis down as well. Now the spread in here is bigger. It's a nickel in between those two. So I should be able to go up 2 more pennies up at the mark. The mark should be closer to 4. So I might be able to get 4 for it. So we're going to go and try to do that. All right. And that will, how much collateral? That'll be $250 collateral. Okay, so let's go ahead and execute that. And I like to stick with the Friday expirations, the weekly, to try and get just things done weekly. It just makes it so much better as far as maximizing the money that you're making on a weekly basis. All right, so MVIS is done. All right, so the next stock in our roster is Rum, NVAX, and Grab. So Rum, I think we already have positions in Rum. All right, we already have a call, but we only have call on 2 contracts. And we own 500 shares total, so we need 3 more contracts, sorry. So let's go back over to the myatm.com website, go to Rum, because we're trying to figure out where our cost basis is. We're at a cost basis of $10.70, so that means we're looking at $11. So see, these are $11.50. So let's just go to Rum, and we would be looking to trade 3 contracts. Trade Rum. We want to sell a call this Friday, and I said 11, right? Yeah, 11 is what we would want to be targeting, and as you can see, it's not worth anything. All right, so the backup plan, I mean, we could go out more weeks. That is one option. Or we could do what I was doing with NVAX, because I like to, like I said, I like to keep it as short duration as possible to maximize the money, the cash flow that we're making. So let's see. So the highest priced one I got here is 13. Stock purchase 10. Stock purchase at 10. So since these were both purchased at 10, I could probably combine these two to clean this up a little bit. And I guess since we're talking about that, I think I'll go ahead and do that. And then we got another one at 9, and then 8.50. All right, so let's see if we can clean this up a little bit. So 2 at 10. All right. We do lose the fact that we bought it in the 27th, but I don't really care about that. I do like to just clean these up a little bit. So this will be 200 shares. Yeah, so click save on that, and we can remove this. And just to verify, yeah, we still have an overall of 500 shares. Okay, so we're good. Okay, so let's see. So I got 300 shares left to target. The cheapest one is 850, 9, and 10. So let's look at the 850, 9, and 10 premiums that we can pull. So 10, nothing. 850, we can pull 15 in. The 9, we can pull a nickel in. So, but I got 200. Okay, but that's already part of the other one, the other 3 that I. Okay, so one of these hundreds is going to be at the 10. So I can only do 110, 19, and 850. All right. All right, so I can do 1 contract at 850. So I'm going to go ahead and do that. And yeah, 15 to 20, so that's about as good as we're going to get on that. All right. So submit. Done. And then the $9 one, we can only do 1 at this rate. See, 5 to 15. So the mark should be 10. I mean, theoretically, should be able to get 10. We'll try it. Don't know if that'll actually happen. So review order, submit. All right, and we're going to have to do at least 1 at the 10 because we only had 100 at 850, so we can only do 1 at that level. We had 100 at 9, so we can only do 1 at that level. And again, that's because we can break even at that price. And then we have 100 shares left to write a covered call on. So the next price up is into the $10 purchase level. So at 10, it says it's not worth anything. Let's see what the spread is. See, now the spread is to 10 cents, so theoretically should be able to get the mark, which is 5. So we're going to go and try and do that. Okay. All right, and click done. Okay. So there is the rum. But that was just the call side. Um, so now I got 3 calls going on rum, and there's the other 2 for the total of 500 that we have, and that doesn't expire till looks like, how many Fridays out is that? So 2 more weeks to get that one to expire. Okay, so anyway, rum, we are looking to go back and do the put on the put side. All right. So we're going to trade. We want to sell a put looking to expire this Friday. And the first one down, 750. It's trading at 778. So let's go ahead and do this. I like to ride right at the money. 25. So this one should be able to get 30 if, press the wrong button. All right, so 0.30. Should be able to get that price for it. We'll see if it executes. All right, we're going to review this order. Collateral 750. It's also something else that I like as the price goes down on the stock. You know, on these lower price stock like the 20s, the 30s, even if it drops 50% in value, you start being able to buy hundreds of shares for less than $1,000 each time. And since it's right at the money like that, you're getting the maximum premium. So I mean, either A, this stock is going to just keep on falling from week to week to week, which, you know, it's not going to do that forever unless the company's going to go out of business. If the company's not going to go out of business, eventually it will turn around and start heading back up. And if you're pulling your cost basis down the entire time, you're going to be much closer to the dollar amount that it can bounce back up to. I mean, you know, the chances of it dropping down to 5, if I keep on pulling the cost basis down to like 9, 8, 7, the chances of it coming back up to 7 is a lot greater than having to go all the way back up to 10. So that's why I continue to pull it down and generate cash flow the entire time. Yes, it does take capital to continue doing that, but you're already in the stock. So either you're confident that the company's not going to go out of business and you need to stay in. And if you think the company's going out of business, you probably should just liquidate everything immediately anyway. And you shouldn't even be playing, you know, any kind of covered calls or cash secured puts anyway. And in any case, this is Rumble. Rumble actually just came out on the market not too long ago, and I don't see Rumble going anywhere anytime soon. So that's what we're gonna do. Sell this 750 cash secured put. And again, all these orders that I'm placing, sometimes they immediately fire Monday morning, and sometimes they don't fire. Sometimes they fire like a couple hours later, and you got to go play with them to figure it out. But anyway, we'll see. All right. Okay, so the next one's NVAX. I'm going to hold off on NVAX because it looks like we might have to sell a put, and it looks like I don't have enough capital in this account to do the put. Fortunately, I have been transferring money over to another account because I'm in the process of moving everything back over to Thinkorswim, which I'll do another video on Robinhood versus Thinkorswim and why I'm moving back to Thinkorswim. I like the way they group things better and present it better. There are some option premiums, but overall I think it's better. I will say it's not near as flashy, but anyway, like I said, I'm going to hold off and do a video on that later. All right, so let's go to Grab. Grab, I have the put and I have the call. I have 200 shares and I have 2 calls currently in play. Okay, so Grab is done. It's okay. All right, so we are setting at NVAX. NVAX, I have 300 shares and I already have a call on each one of those. So we're covered there. So now I need to do the put on NVAX. And as you can see, I only got $1,000. So that means the most I could do is a $10 put, and I like to be right at the money. So that would be a 1650 put that I'm looking to do. So as you can see, I don't have the money or the capital to do that. So I'm looking to sell a put. And see, we can pull in $100 for that. So that's pretty good. The $10 one, which is all I'd have the capital to do over here, is only $3. So I probably would not be messing with that. So in any case, for this video, I've done the weekly review on all of our positions. We have one NVAX put left to do that I can't do on this account. And I have more capital over in the Thinkorswim platform, so I'm gonna, and there's other positions I want to actually open up in that one, and to keep it briefer, I'm gonna just do another video on that one to cover that information. So anyway, that was the weekly review. Have a good day. I'll see you in the next one.